Now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. I got my son with me because he's homesick, feeling a little bit under the weather with his stomach bug, but we're going to manage through. Hopefully yeah, I can get you a tissue in a little bit. You want a tissue? Here, wipe it on me. There you go. All right, so we've seen a positive day, a green day overall. Here you go. I'll give you some tissue. You ready? There you go. Tissue. Ready? Sorry about that. So we saw a green day and we saw a crossover flirtation on the 12-hour time frame, which we'll get into in a bit. But first, as we stand, we are rejecting off of the 618 diagonal pitch fan trend line, whatever you want to call it, mean reversion path, and we came back down to bounce off of daily support structure of 30,270 and held that for a daily candle close above that level. Are we going to make another stab to the upside? Let's check the liquidity to see if that asks for that type of level. Please don't cry, buddy, it's okay. So if we go to the high block capital, what is this? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait and where they've been burnt to a crisp already. So we're going to take a look at the 1 minute time frame, and they've been doing this a lot recently where they pump it and immediately stab back down and take out all the 150x people that FOMO'd in as we ascended, so they don't have to pay either. They reclaim the shorts and then also take out the longs in a wham bam thank you ma'am to both sides. All right, so they did this again, and then we're gonna play with a little bit of fractal magic because this looks like the exact same thing that occurred here inside of this. So this entire thing is inside of this thing too. So are we going to see another stab up here and try to take out some of the liquidity? The CPI data is coming in hot today. If you go to forexfactory.com and you check out what's in the news pipeline, we have CPI data for the dollar at 9:30 p.m. my time, which is just before the open. I think you can set it to your time frame if you look at that. But yeah, it's going to be coming today. So it looks like they're poised to take out both sides and make a directional play based off of that idea. So let's go back to the liquidity. So as it stands right now, you have 99 million in long liquidity trapped in up here just above this range that they could come back to down at 30,269. And then also you have some less powerful partners in crime.
No.
What do you want? You want this one? Okay. Don't scream though, okay? So this 65 million in 100x up above is not in the same strength as that down below, but did they take out the 100x in order to fuel that to come up to this level at 30,932 to take out all of these 100x/50x people from over here? There's 100 million at this 30,951 region on the 1 minute time frame. Let's expand as it stands currently on the 1 minute time frame. We are imbalanced to long liquidity by $1 billion. Whoa, don't drop that, please. Be gentle, okay? All right, so we're imbalanced as of this father time forgetfulness chart. It's more imbalanced to the longs on this, which is why we need to expand our vision to the higher time frame. So let's do that now and expand our vision. Shout out to everyone here. Booyah, 3 of you watching. Thank you for your time. And if we go to the 7-day time frame, we're going to see a hotter signature up above here in the range at 31,350. There's $4 billion up there at 31,350. However, if you look at this entire range, you have 2, 4, 6, 8, basically 9, 10, 11, 12, and some change. So let's just make it even, 13 billion, and then 13 plus 4, $17 billion up to 31.4 in this little juicy range here. However, if you look down below, you got 2, 4, 6, 7, 8, 9, 10, 13 plus 16, 17, 18. So you got a little bit more stacking up down to the 29.2 region on the 7-day time frame. As you see, there's more liquidity down in this unrecovered wick zone. So if they come up to this region, do they start to fatigue or wick off of it at some point and come down into this region? with the CPI data, they could wick-whack at both sides. It looks like they're making a symmetrical triangle pattern in order to do that, in order to make a attack to both sides, similar to what they did back here. As it stands right now, you have thicker signatures down below at the 27,350 and the 24.3 region in terms of heat signatures to the downside. On the 7-day, I would say you're slightly imbalanced to longs on the overall scheme, but in one region you have some shorts up at 31,350. Let's expand our vision to the 1 month time frame and take a look at that. The 1 month time frame also has an imbalance leading to the downside, with the thickest immediate region up at that 31.7 that they left on the table at $22 billion. So if they come up and clear that region and reject, then you can look for this to potentially play out. You have $6 billion up to the 31.4, 5, 10. So you got $14 billion up to 31.4, and down below starts to get thick down at 29.8 once again. So if we start to see this recovery of the wick, then you have these ideas down below here, double digits at the 29.4 and below region. So coming down into this 50 billion for a sustained move to the upside is what I'm currently thinking about. However, our indicators are indicating more upside at this time. So how far do we go up before we go down? So as it stands on the monthly time frame, liquidity wise, we have hotter signatures down below than we do above. If we start to expand our vision to the 3 month, also we will see this being the case. You have double digits down here, sub 24.6, but in the immediate range you do have double digits up here in the 32k region. So which is why I was looking at the idea of coming down and eating some of this, and also the people stops into profit from down below to stop out and clear this consolidation range before making a sustained move up to here. But I'm always open to the possibility of being wrong. If we go to the 6 month time frame, we can also see that that imbalance to the downside is still existing, with $160 billion down at 24.3, $137 billion down at 24.6, with the immediate range just above us with nearing 100 billion up to the 33.3 region. So you have 1, 2, near 180 billion plus this 300 billion, 400, 500, about $500 billion up to 33.3 on the 6 month. So do we start to eat into that liquidity before retracing back into this? In terms of just comparing pools, this pool is thicker than that pool. So do you see a Bart Simpson retrace into that? We'll get into the dollar and how that could occur possibly going forward. If we look at the 2-year time frame, you do have this nice liquidity pool up to 33.2. We just went over that. In this 2-year time frame, this is approaching $500 billion up to the 33.2 region. So coming back into this in a longer term swing idea is definitely something to look at. Coming down to knock out these ideas, these players first, was what would have been ideal for me for that swing trade. Are we going to ignore that and just go higher, or are we going to stop hunt and drop it down to here first? We have not yet left the range, so don't count your chickens before they hatch, and pay yourself and set stops into profit as usual. So if we go back to the monthly time frame and head into our charts, we're going to go take a look at our oscillators on the Binance chart, and I redrew some fibs to give us some ideas on impulse retrace ideas. So as it stands, we previously had impulse retrace on this daily thing, but we've now created a lower high on the daily time frame to here. So I did an impulse, we'll just show you, impulse retrace, and that gives you your bearish trend based fib levels and the 236 entry model at 30,618. So if we reject off this 30,618 level, you could come back down to the 29 region.
Papa.
Yeah, relax, buddy. I know your tummy's not feeling well, but it's okay. You can listen to your daddy stream, right? All right, and on the impulse retrace idea for the bullish trend-based fib levels, you do here the same impulse retrace on the daily time frame, and this level is the 236 entry model is 30,724. So we're right within the range of entry for both if you're going to head one direction or the other. So if we head in this region to the 236 to the downside, then you're heading down into these regions perhaps.
Papa.
Yes, sir. Yeah, I'm your papa. And then if you're heading up, then you would head in these regions up here. At 32.9 and above, and we went over the liquidity to suggest that at least up to 33.6, and even there you could reject too. So these are your newly drawn fibs with more impulse retrace ideas in mind for myself personally. And I will remove this and remove that. All right, so now let's put on our heads up display, shall we? Let's do this. Sorry, I'm not in the exact headspace I want to be with my son sitting here. Just gotta make sure he's copacetic while we do this. And what is this little bit of happiness? This is momentummaster.info. Scroll down to features and take a look at the toggle switches available here for you, and then also look at the trend cloud and various components and how we reclaim them, and then see that thinning, and then boom, shoot to the upside. This is kind of what you look for over and over again, so this is what we will be going over here. All right, so we just had a daily candle close beneath the 236 on this bearish trend-based fib extension level of the daily time frame. So you have this impulse retrace 236 model at 30,618. So we are starting to reclaim the baseline here of the daily time frame, which suggests that this suppression of this retrace idea may be over, and we could break above this and go to the 236 bullish model out of here. So this is a interesting thing to see. Where do we close and start to make our ascent or descent accordingly? So we're starting to reclaim these time frames, and we saw this happen on the 6 hour and this 12-hour flirtation that occurred the other day. Okay, so if we look also at the 3-day, let's look at the oscillators. The stochastic RSI is holding in a manner here, going up ever so slightly. Money flow is starting to come above the RSI here as you have the Williams working against you with that possible suppression idea, some ambiguous signals with the leading MACD crossed down and flowing down here, and the fatigue of the money flow expressing that it could come down and reset. You have a lot of dead weight we talked about with the liquidity down below that they have yet to clear. So clearing that would give you a smoother takeoff for a genuine swing play up into these regions first. So if anything, we're getting a sweep of the highs before we come low, in my personal opinion, based off the ambiguousness and the liquidity. If we go to the 3-day time frame, which just closed, the 3-day was overbought and starting to come down here. We talked about this average of the 3-day coming up in a manner here before it starts to reverse. So that means another 3-6 days of this coming up a little bit more. Does that mean coming up after going down? I don't know, but it's starting to get to that point where it could cross at any moment, or at least come down a little bit more in similar fashion here. And we see this expressed on other time frames. If we go to the daily, we talked about that back here when it was rising up, and we said this could go sideways. Well, this comes up to the average comes up to the actual version of itself, which it did, and then we saw the alarm cross, which gave us the alarming possible suppression idea. And once again, this daily time frame is that ambiguousness of suppression could occur as we try to reclaim the baselines. if we start to make our descent into the 22-hour time frame, the 22-hour, hey, you're making a noise there. Chill out, buddy. Stop, please. Whoop. And the 22-hour cloud is acting thin in a manner here, and we're starting to reclaim it with a cross-up event. Are we going to see some sort of continuation idea on the 22-hour time frame? The Williams did get to a level here, not quite oversold, not the position we generally like it, but it did do a double bottom in similar fashion and then start to cross up and head out here. Hey, chill out, man. And previously we had some money flow out beneath the RSI here on the 22-hour, which has now reconciled itself, so that money flow has equalized and there is no it could continue higher, but there is no imbalance in terms of disparity between the money flow and the RSI. This is why we like to put these overlaid with one another. When you get the money flow beneath the RSI in this fashion here, and the RSI in white and the money flow in gray, when they come beneath each other and there's this disparity, they tend to like to come up, and conversely, when the money flow gets above the RSI, it tends to want to come down. So looking at that disparity on the time frames can tell you which time frame is calling for what direction at what time. Hey man, relax. You're on the TV. Shh. All right, yeah. So if we go to the 22-hour time frame, we are getting the money flow coming back to that 50 level, and this Williams still, in my opinion, should come down. We are getting overbought slightly on the 22-hour stochastic RSI, and we have gone sideways essentially since that time. Are we going to see a full expression of the last hurrah of this? Time will tell. Hey man, why are you pushing that away from me? Hey.
I said stop it. Stop it. No.
Alright. So if we look at the 12-hour time frame, 12-hour time frame is starting to come up in a manner here. The Williams tried to play with you in terms of not getting oversold before takeoff, but we saw that come down to a level of 67, basically the 30 level of the stochastic, and it was previously suppressing takeoff. We saw this disparity and this hidden bullish divergence on the money flow start to give you that idea of rising here. Then we start to see this come back here, and now we're getting this fatigue once again of the money flow above the RSI, suggesting we could taper here at 50 and come down for that final descent into the fertile crescent. So as I said before, I'm more interested in seeing a sweep to the lows down here, just me personally. We did get a cross-up event which did close, but it's at a point where it could get negated either way. So you got to watch it and take profits as the flirtation occurred. Yesterday, you could have taken some profits up in here and seen that, but the crossover events do play out in some fashion, which it did. If we look at the 6-hour time frame, hey man, you keep dropping it, it's gonna break. It's gonna break. Don't drop it, please. Please don't drop it. Here you go. All right. So as we go into the 6-hour time frame, the 6-hour time frame is extremely overbought on the stochastic RSI. The money flow is fatiguing above the RSI. I'm seeing a lot of fatigue with the RSI being beneath the money flow like this on these time frames, with the 22, the 12, and now the 6-hour also having that fatigue potential. You also have the cloud idea. We had this cross-up event last Saturday. We talked about the maintaining of that and the 236 that we had on the bullish trend-based fib from this level, this impulse retrace idea. Wait, no, I think it was the first one. Yeah, it was the first impulse retrace down here. And then when you held the 236 at 30,080 and you started to close 6-hour candles above that, we said it was holding the baseline, and you watch out for this 236 level, and then you could see upside. So this essentially played out. congrats to anyone that took that 3.333% on that idea of the 6-hour cross. So now you're starting to see if we close out, or if this becomes a purple candle and you get that 236 entry model of this bearish trend base fib to confirm, then, and you come beneath this baseline, then this basically comes back to the equilibrium of point where it could cross back down on you. So the cloud is starting to hold here. If we take a look at this, we had this purple sell-off cloud that was met with resistance. We attempted to close out candles above it, so it's trying to create some sort of support structure on a bearish kind of cloud without the thinning and the curvature that's sustainable. So this could open up into a 𝗥𝗲𝗹𝘁𝗲𝗱 fake out. CPI data, what is the CPI data going to do? We're going to find that out together. So if we go to the 4-hour time frame, so I want to do a quick fractal really quick. Let's take this off, and I'm going to show you some cool little fractal stuff going on when we go to the lower time frames in a bit. Let me make sure this is over here and this is over there. Okay, so we previously got that fair value gap up here, came down, and the 4-hour time frame cloud is not looking so healthy. We're seeing this thin cloud. It's thinning, but it's pointing to the downside. The curvature is not in the favor of going up in this angle here. You know, if you come to an angle down here, for example, the cloud angle was just much better. What do I mean by that angle? It's like this curvature that preempts the move. So this 4-hour cloud down here had much more conviction to the play, and that curvature and that strength of the cloud showed you that this was a sustainable play. So do you get that same sustainable feels here just yet? Not quite so. You're seeing this start to curve down in a manner here. It's not seeing the sustainable volume. If you go to the trend cloud, it's a volume weighted cloud formula which expands and thins according to the amount of volume present. So it doesn't show you that there's that much present for this move. It's a bunch of stopping volume, and surely enough, if we go to the volume down here, it's all gray, so it's not really sustained. The only green vector we had here was immediately met with a red vector, which was not quite an engulfing, but the wick was pretty engulfing, so it engulfed that entire vector right back. So it was a straight liquidity grab. So do you see these green vector after green vector? Like back here, you had 2 green vectors in a row to get us out of that cloud. You had a green vector, and then you held. So you had 2 green vectors on the 4-hour, which we did not have just yet, and that caused that nice shift and thinning and upward momentum, suggesting we would go higher. And then you had this reset of the stochastic in a manner here, which reclaimed this, and then we saw that continuation idea. So if we're not getting that just yet, we reclaimed it once, and we're kind of flirting with the idea of confirming it as support on the 4-hour, but the ambiguousness of the Williams at the 50 level and the stochastic RSI and the money flow and the RSI all at the 50 level, it's just sitting in wait for that CPI data based off of what I'm seeing here, just holding in the range between these 2 pools. So it could come up to this 31237 pool and do its own little wacky motion on that. This whole symmetrical triangle could come up to here and go down to there, or it could go down to here and go up to there. Like there's basically it's being symmetrical in a way to induce both sides into the equation right now. And so yeah, you could draw trend lines and stuff, and you drew this, you could draw this, and you could draw this, and you'd be like, it's getting really tight in the range, you know. And what do those little patterns represent, those 50-50 patterns just represent liquidity, and then they get shorts piled in here, and they stop them out, and they stop them out, and they stop them out less and less, and they stop out the longs and stop out the longs, and they stop them out less and less, and then they pick a side and they go. So the patterns are tertiary to the liquidity traps and everything, and then the momentum kind of gets you in a zone for where that could preemptively move. So if we go to, sorry kiddo, stop moving my mic please. If we go to the 12-hour time frame, this cloud was the thing that has the ambiguousness as well. We did get a cloud above, a candle above this cloud once again, but the angle of the cloud, stop it. We got a cloud reclamation, and we have this basically the cross up event negated this previous downward momentum. So this 12-hour candle in the next 12 hours needs to show us some conviction to the play for this to be real. So the next 12 hours would be around the New York time frame when this closes, so it will pick a direction here. If it rejects off the cloud as it seems, as it stands right now, the direction is, the angle of this is slightly looking less likely to go up here. We've seen the swing play in the past where it thins and continues, but it's more likely than not every time that it switches direction, it switches for the opposite side. This was where we saw it do a meandering and continue to that downside path. But for the most part, when it switches direction, the momentum of the trade goes up and goes a little bit higher. Here's where it started to thin again. And so we were seeing this kind of thinning continuation idea of this play here. This can occur in the opposite manner, where you have this down up play, potentially speaking. Here it never went purple though, and so getting to this thinning point and reclaiming the cloud and having candles close above the cloud. Ideally, the candle close, a 12-hour candle closing above that 12-hour cloud could suggest that continuation idea. If we go to that point, we also had a reset of the stochastic on that Friday, and so this reset while you hold the cloud was kind of a clue. And here we're getting overbought at the cloud at the 50 level. Do we see this continue? If we go to the hourly time frame, cloud is very strong. It's what we've been bouncing off of, bounce. It's been this steady progressional upside play. The money flow is getting above the RSI here, suggesting a fatigue at some point, or at least coming back to the RSI. This is like the fourth time we're saying this across different time frames, so that's something to note. And we are getting a don't drop it, thank you. And we're getting the cross down play here as the hourly candles close beneath the baselines. Does this mean that you come back down to this $99 million pool at 30,269? You do have more longs to shorts in that immediate inducement range. Yeah, I know, your tummy hurts, right? Ouch. Ouch. You want to go watch Ponyo? You okay? Sorry about that. So the inducement range at 99 million to 65 million. There's 30 more million induced down here in this little burst wackiness. So coming down to that region would be a $30 million better choice for the market makers to take. as it stands right now with this inducement, you got 17 million induced here to the 21 million induced there. So you have more longs that were induced just a moment ago than shorts. So it could be making its way down into that 30,269 pool, and maybe wicks off of that and returns to equilibrium. I don't know. Let's go ahead and take a look. The hourly, they've been running some weird algorithms recently. These burst, return immediately, and then kind of go in both directions. They even did that inside of here on lower time frames. If you go to the 1 minute, like even if we go back to here, for example, if we break this down into the 1 minute chart, they've been doing this kind of play a lot recently, where they break it up, immediately bring it down, break it up, bring it down, and they're just kind of like slowly going up as they take out the 100xers on both sides. And so this type of play, we're going to go into the fractal like nature of it, how it breaks up to come down to break it, and they do this weird wick wackiness now to try to take out the 100x people. So it's kind of a newer algorithm. I've seen some information out there where people were bragging about BlackRock using their Aladdin software, their Aladdin code or something with preparation for the ETF. I wouldn't put it past them if they're like implementing their own algorithmic trading software to create these new algos that bring it up to bring it down to bring it up to bring it down, that do this wick wacky price action instantaneously. All right, so we're in the Asian range. The Asian range has opened. We're in our Hong Kong is starting to open. Hong Kong generally pumps it into London, which they fade into London, and then London does its thing, handing it off to New York, and then New York does its thing. So watching how the time frames interact in terms of liquidity providers in the Asian trading session, London trading session, and New York trading session, and what do they do to complement one another is kind of an interesting thing to note. So if we note here, the Asian one pumps it, fades to London, London does its thing to New York, and New York sends it. And then Asia pumps it up into London, London pumped and dropped it, handed it off to New York, which pumped it and kind of dropped it and brought it back to equilibrium. So Asia doesn't really have much liquidity to work with, so they do a stop hunt. Generally, in the next hour, 2 hours time, they pump it up, and then around noon, lunchtime, they fade it and hand it to New York, and that's all she wrote for New York. For Asia, Asia's kind of weak. Now, if Asia does decide to send it, which they do occasionally, so we'll go back to a time where Asia sent it, all right? This was on Thursday. We were looking for a fade here, and we were talking about coming to attack the 29K region. I remember on July 6th, was it? Was it that one, or was it a different one? Well, let's do the one that I remember, which was, I think, this one. But, okay, yeah, it's the same kind of thing. So there are occasions where Asia pumps it. So here, Asia pumped it at 10:55, basically just after this stream will end. And then they brought it all the way up, and then they handed it off to London with a fade. And then London passed it to New York, and then New York just dropped it like a rock at the London close. So you look at what these complements are doing. If Asia pumped it and London pumped it into New York, then it's pump, pump, pump. It's rarely 3 pumps in a row. So there's a pump, pump, dump, or a pump, dump, pump, or pump, dump, dump, something like that. So you have to look, what does Asia do? And if Asia does this massive send, and then London continues the massive send, then maybe London and New York will hold it. But yeah, we're getting into the CPI data, so Asia will likely pump and then fade as it normally does. But you look here, and this day it pumped it up, and then London pumped it up, handed it to New York, and New York pumped it up and brought it back down on the London close. So again, you'd like to see this with conviction behind the play. All right, so where do we stand right now as we go back to these charts? So we're in the London the Asian session. Asia is opening. We're looking at these levels of closing out candles. Beyond this level is bullish. Beneath this level is bearish. So we're starting to see that occur. If we go to these time frames of these levels, they're holding true. This 706 rejection, 236 entry drop, 236 rejection, 236 rejection. So until you can get back above this range we talked about, we could be looking down into these regions to fade it, at least coming back to that frugal point of the 30,269.99 million pool down here. As it stands on the 1 minute time frame, there's thicker regions down at the 29.8 region. We already went over where those pools are. If we go to the hourly time frame, once again that cloud, so this cloud is pretty thick and not showing signs of abating just yet. The tree thing, I can show it to you after, kiddo. He wants to see this like thing where I separated photos into the different spectrums. I can give you this one. Here, take a look at this. It's a waterfall. There you go. Or how about this one? You want to see this? I took this thing, in case you're wondering what it was, is this thing where I separate the images into their various cyan, CMYK colors, and then you overlay them to get the real picture. So it shows additive and subtractive color, and kids get to learn what the additive and subtractive does to the image in a experiential learning experience, STEAM-based stuff. Here you go. You want to see this one? Patterns of the universe, fractals. Here you go. All right, so we're getting 4 time frames overbought here. You got the cross down event in play. The hourly time frame wants to come down on you, so watching this hourly reset because the money flow is wanting to come down. So what I'm seeing for right now in the interim is breaking this cloud and coming down into the 30,200 region to take out those pools and recover some of this liquidity and reset some of the time frames in its entirety. If we close beneath these 236 levels, then we're starting to see this possible rejection. And yeah, the CPI data. Personally, I think we would go into these levels. I would like to see it reject, honestly, at the 12-hour cloud for a sustainable move. I've been saying it for some time now. The idea of coming down into here to take out this sell side liquidity before making a sustainable play up to here would be the reasonable thing to think for me. And also, why would that also be the case? Well, let's look at the DXY. So the DXY is now experiencing a rocket ship event, and we're breaking down, by the looks of it, past these levels of these fair value gaps here, which also happen to be the 786 region. After the 786, your next level is coming down to the 1 here at the 101.73, which also happens to coincide with, let's see, is this a level here? Not exactly the low of the lows, but it is in this support region of these wicks being hit multiple times. So do we get a reaction of this rocket ship? So the previous time we had a rocket ship on the 12-hour, let's just look at that for the dollar. We had a rocket ship here on the 12-hour, which was at support, which didn't take long. It didn't take off exactly well. It did go up by 2% here. Here, I'll take it. Ooh, What do you want, kiddo? All right, so as the dollar is coming down here in a manner for the CPI data, doing this in order to accumulate a position to send it. As you come down lower, these fair value gaps have now been recovered. As have that 786 level is dropping. If we go into the 6 hour time frame, we're starting to see this drop now. And where is it going? Is it going into gold? Let's take a look at gold. Looks like it's going into gold at the moment. Gold is seeing this surge up, so the value is being stored in gold as opposed to the dollar right now. And if we go to the NQ, we caught some beautiful plays yesterday for the NQ. These two in particular. This one here at the bottom of the 618 golden pocket out, and then this other one out here too, up to the 618 here. So it looks like we're consolidating up in this liquidity range, golden pocket retrace. Are we considering to go up to the higher zone at 302 to recover this range high wick? That could be the case if this continues higher for the NASDAQ. If we go to basically NVIDIA or the VIX, let's see what the VIX is doing. VIX gapped up here. Gapped up and came down, and we're coming back for a double bottom idea. If we look at the ES1, so we were talking about that double bottom event started to happen off the reaction to the 618. I don't trade the ES, but it's pretty much the same stuff as everything else. So we were seeing this double bottom occur off the 618 reaction, and now we're starting to come up to the range here. If we come up to a high point, do we reject and come down into this gap? And this gap down here, this is what we were projecting back in the weekend, I believe. So we were looking at this idea of the bounce off of here, which it did. It does seem to have more predictable price action than the NASDAQ. The NASDAQ is quite the beast to tame, but if you can tame it, it's very fun and volatile. So if it looks like this reacts more cleanly off the levels here, like ETH is to Bitcoin. And yeah, let's just go back and see where it's going. So personally, I would like to see this rejection because the cloud health is not so strong looking to me. And if we go to that money flow fatigue across those time frames, ideally I would like to see this fake out of this cross up event for me personally and go down into these zones. But ultimately you just take it one reclamation at a time. So if you were, let's just go back and create a narrative here. So if you had taken this trade, let's just say hypothetically speaking, you entered here on the cross up at 30,191, and then you put your stop into profit, and then it crossed up, and then it did its thing. It did a little stop loss hunt. You did some risk management and assessed to stay in, and it gave you 0.82%. You set your stop into profit, you trimmed, and then it kicks you out. However, it maintains by closing above the fat boy, which also happened to be the trend-based fib extension model that we talked about here with this impulse retrace idea. If it holds above that level, then you start to think about the idea. I think it was actually from here. It was on the lower time frame, but I don't remember exactly where that was, but it basically created a level like this. Yeah. And so the 30,041 level holding the baselines, you could have entered again off that idea and then basically ride it to its completion. And if you're not greedy, you would have taken some profits off of that before it retraced, and now you'd be flat. And so it played out in my mind, even though it's holding the baseline, it could continue further. This is quite thick. The separation between this would need to see a massive red candle come into this region for this to wait, what? For this to be negated. It would need to have a solid rejection off of this in a similar fashion. Holding the cloud and closing out above this baseline could see continuations on the 12 hour. The 6 hour is the halfway point to the 12 hour, so seeing this 12 hour hold this cloud and push back up is the bullish continuation play if you're looking for that swing play. So this swing play cross up event baseline cross is not to be ignored. We set it back with the 6 hour, so as this holds, are you going to see this continue as it reclaims the 12-hour cloud? I'm seeing a lot of ambiguous overtones leading into the CPI data, particularly the money flow on the 4 hour, and this is coiling up for an ambiguous decision here on the 4 hour. I don't really see it. However, the cloud is turning to the downside, suggesting more of a downside idea to continue here. I don't see this turning up instantly. So coming down into the liquidity on the 1 minute time frame down here at the 30,269 would be your next target, coming down to there. So watching where this closes in the next 2 hours and 35 minutes. Remembering that Asia does not normally pump it so hard, so even if they were to come up and fade it into London, it would be coming up and rejecting off of that 236 level. So seeing, does this 236 level hold? If not, then you're slated to see it come down further. I think he's getting sleepy. Getting sleepy, right? So that's my story, and I'm sticking to it. As it stands right now, you got some ambiguousness in terms of directional play for the 4 hour. The hourly looks like it wants to come down with that money flow above the RSI here, so we're looking at an hourly play here for a rejection on this cloud and starting to see this cloud taper in some manner. As it stands right now, it's pretty strong. So seeing this come down beneath the cloud and start to bearishly retest it, ideally speaking. And that's about it. We'll take some requests and see what's going on. Bit ambiguous price action. Oh, I wanted to see the fractal, so let's do the fractal. I'll turn off the oscillators and my heads up display, and then I'm going to show you some fractal stuff. So let's go to a clean chart. Okay. So if we take the bars pattern, you can take it from here, from the top of this drop to the end here, and then you can basically crunch this down inside of the other thing here. Like this drop is kind of inside of here. I mean, it's not much of a stretch, but you do have kind of this drop, rise, 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 consolidation again. So you're basically doing the same thing as this inside of this. It's a very strange idea. And then if you take this idea and stretch it out, like let's just reverse it, right? And then I was doing something the other day. I thought you could flip it, but it's just kind of interesting that they do this kind of thing over and over again. Even this thing here is kind of the same. They bring it up and bring it down and bring it up and bring it down and bring it up and bring it down. They're doing this like spike drop, spike drop, spike drop. They get a lot more of these like spike plays these days. It's kind of fascinating. Been noticing the self-similarity of this entire consolidation inside of here in a shorter time frame. So yeah, as we reject off this 236, we're just looking for the fade down to a certain level here. Let's see what that is. Let's mark it off diligently. So we got 30,269. 30,269. So that would put you just at these wicks here. If we see some lower pools down below, we have 2965 region. I'm going to go look at the higher time frame here. Let's look at the 7-day. He's asleep now. Sleepy boy. Significant is 29.2, but this entire range is just like we ascertained, like $15 billion all the way down from 29.8 and below. I don't expect a big reaction until basically the New York Open. So how will they send it is the question. You have your levels basically for the 236. It's basically your point of control. If you look at the point of fixed range volume profile from here to here, we're at the same kind of zone right now. This fixed node, and there's a lot of volume and nodes within this range. So if this entire range needs to break to make a conviction decision either way. Above this 236, this is also confirming the 236 region. If you look, there's not much traded above the 30,724, so they could come, if they come up from that, that would be a signal to go long and go above this region. So 30,724 for long plays. Beneath that point would be targeting down into this sell side liquidity. Personally, I'm favoring the sell side for a more sustainable swing play for me personally, but that's just me. So how do you get that? If you don't know, there's the fixed range volume profile tool down here at fixed range volume profile. Underneath here, your long position, short position, fixed range volume profile. You do 2 clicks from the range you want to look at. I like this better because it's more precise to the range you're looking at. So if you just want this information and not here included, you can do that. And we're just at that precipice of the point of control for this range. So this entire range point of control is currently where we're at, but we have a lot of points of control that are contending with that region here and here and here. There's a lot of trading and selling, accumulating and distributing within this region. So the next level would be down in that fair value gap, or that liquidity pool at 30,268 if we drop down out of here to reset the hourly. Everything is getting tight though, so it's decision time for the markets coming soon as we make these tertiary pattern-like behaviors of the coming down to the bottom of this would also insinuate that as we get tighter and tighter and get to that point of control of that decision later today, perhaps. We'll see. Sorry guys, I'm not on my top game because I'm watching my son who's homesick. So I hope that was informative for you. I'll take any questions you have, and before we bid you adieu, anyone have any questions, things they want to look at? We're looking at Sol, was it the other day? No, Illuvium. We're looking at Illuvium, so let's go see what happened with Illuvium. Illuvium. What do you know? It came to that region we were talking about. We said it could come up to this 41, 49 level, and it did. So it was nice to see. I don't know when we were looking at it, but it was not that long ago. Let's turn back on our oscillators to see what we were seeing. So we were talking about the rocket ship, that was appearing. And so ideally you'd like to see this. We did a reclamation of the cloud similar to other assets. So you had the cross up play, the tap to the low here, and coming up to this region. We recovered that fair value gap. So if we start to reset some of the oscillators here, at least the hourly, you can have a shoulder head and a shoulder out of here to continue up to these regions. If the rocket does play out, the next point of interest would be up in the 43.35 region. You have some range ideas to get rejected at here. Okay, so you have these ideas to play out for Illuvium to continue on that rocket ship path. Hourly cloud doing the same thing Bitcoin's doing, with a little bit more solid TA in terms of bouncing once and holding this fair value gap, looking for permission to go up further, reclaiming the 200 weighted moving average. Okay, anybody have anything they want to look at? No? Total also at that 236 point. If it cannot get above that point, then we're looking to come down to this level, as we said before. Needs to make a conviction above that 236 to indicate that it's going higher in terms of going up into these regions of market cap or total of cryptocurrency. We have some fair value gaps to recover along the way. We recovered one already. We also have some down here with the wicks and these candles. We could do a bearish projection now based on the impulse retrace idea. So once again, you're in that kind of zone to look at for going lower or higher. If you go to the lower regions, that 786 recovery would be there. Even bearishly would be down here. And that is the total market cap in a nutshell. So it's all waiting for the CPI data. There's not much to really do until then. Everything's going to hold most likely, unless some news about that leaks in advance. The dollar looks like it's poised to pop, though. Can't get much lower than that. I mean, you can always go lower, right? But you're getting these rocket ships, which generally tend to play out, especially if you have them in succession like that. It eventually starts to make a bottom-y behavior. So the next region would be down here on the daily time frame. You do have that cross down event, which is momentous in nature, which is hard to stop necessarily. Exact point on that candle, most likely coming back into that bottom of the range here, creating the double bottom perhaps, and then this entire thing could be a complex W triple bottom event. So if you have realized that you have a lot of liquidity up in here too, these fair value gaps in this daily time frame here need to be reclaimed at some point at 109.4. So if you are thinking of bottoming for the dollar, this would be where you do it, at support with the rocket ships intact. So seeing that occur would not be crazy to think. As the gold rises and people store the value in gold, it'll eventually go up to a certain point and get a shoulder head and possible shoulder down, getting that bounce off the 618. All right, so we closed out the hour. We're starting to get rejected off of this cloud idea. This wick is starting to play out this cross down event. The hourly cross downs, when they're not playing ambiguous games like they were here, they eventually start to see 1, 2, 3 hits to the high and a reversal perhaps down into these regions and below. So just take the 1 hour retrace for what it's worth. We did change that bearish sentiment here. We went over how that shifted, but we're starting to create it again on the hourly time frame. He's here sleeping. You want him? Thanks. Sorry about that. So anyway, as we come down here into the Asian Hong Kong Open, so Hong Kong is looking like it's sending it down for a little bit right here. If we break down out of the cloud in this 236, then we'll see the reset of that completely. Once again, the money flow above the RSI coming down is what we like to see this in the oversold region, similar to here, getting that green oversold Williams like we did, whoa, back here. We had some double bottom with the rising sun, and then we were gone from there. So this is what you would rather see for entry levels on the hourly time frame. So I'm not the high risk type player, although you could enter off of these in these cloud bounce ideas and take them if you're a scalper as you drop to the lower time frames and see those entry ideas occur. I scalp more of the NASDAQ because it's more volatile, but we may get into those things in the coming days. I just passed 5 Apex accounts linked up, so we're gonna have fun with that hopefully in the next few days. All fingers crossed on that. So yeah, coming down to that 99 million is what it looks like could be occurring here as they come back to the pinged in liquidity down here at $99 million. Do they wick off this guy and go back into the equilibrium? Do they ping in more shorts as they do that? Only the time will tell. And that's my story, and I'm sticking to it for now. Watch for that point of control failure and coming down to other regions here. 2 hour time frame cloud also strong. Not really seeing so much weakness in these lower time frames. The lower time frames have been these beauties to behold, so beware of when they start to cross in the opposite manner. So take this for what it's worth. If it bounces off the cloud here, you could see this break and change. We're not getting the conviction just yet. Like I said, most likely the CPI data is going to be the play. So how does this 12-hour candle close on the point of control? Looking at the 12-hour has been more mind settling for me, because it's basically going off of midway points of the day. So the next 12-hour candle close is the into New York. So how does this close? Is it going to close beneath this cloud and the point of control, or above the point of control and the cloud? Currently you have the cross-up event insinuating it will. So just making it simple on the 12-hour and say, okay, well, we've reclaimed the baselines and crossed up here, and we're trying to reclaim the cloud /point of control. So if you're so inclined to believe it, then maybe we make this stab up to the liquidity at 31.2 and beyond to get this 31.3 people out before going lower. Do we go up to go down? And then there's a larger retrace in order, and this is the last attempt to go higher, and we're never going to go here just yet. Or do we go lower to go higher first? So whatever the first play will be could be the fake one, because we go lower to go higher and we go higher to go lower. So with this bearish trend in mind, we go higher to go lower here. Is this a ABC to the downside? If we reject these 236 levels, it's implying so. So where does this 12-hour candle close? This current one has closed beneath the 236 but above the cloud and gotten the cross-up event. So you're getting this ambiguousness waiting for the CPI data to occur. So far holding this super trend on the 12-hour as well. We previously watched the 4-hour fail back here. But we've reclaimed that super trend as well when we broke it up here. The cloud insinuating more downside acting. The 4-hour cloud has been acting strange, to say the least. Do we come back and find some support on that cloud and start to shift it here? We'll keep you monitored as we go. All right, ladies and gents, that's it for me right now. It's basically hard to say at this time. We're getting the 15-minute cloud starting to turn here. Is this a bearish retest to drops lower? On the 15-minute is reset, but you have more time to come down on the Williams here. So coming down to the 99 million in preparation for FOMC or not? Or are we just going to continue consolidating in this manner up till 9 p.m.? I don't know. Looks to be the case, but you have your levels, so let's check to see if you had any questions and we'll bid you adieu. No, it looks like you don't. Well, there you go. That's my story and I'm sticking to it, folks. We're gonna watch, see how this candle closes. Do we close above the cloud here and start to hold this point of control in the next 4 hours? We'll let you know. And in the next 12 hours, we'll have that. Well, actually, this next 4 hours, we'll have the 6-hour, and then at 6 hours after that, you have the New York Open. So we're holding this point of control to possibly go higher, but you have multiple contending point of controls along this entire range. A lot of accumulation and distribution ideas here to behold. So it's not the one and only point of control. There's one here, one there, one there. There's multiple. It's a huge amount of trading volume in this range. So in the last 14 days or so. And we're not going to see anything most likely on the live stream, so you just have your things to look out for. As it stands right now, it looks like you got the reset of the hourly in play, so that's what we're pointing out to you here. So we'll just see how the hourly resets, and I'd like to see the sweep of the lows completely. That's just me personally. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff